Fundamental analysis in crypto trading. When valuating a specific crypto, you might use a key fundamental tool, analyzing any external factors that have the potential to affect the asset's performance. Before we dive in, welcome to the Waploaded Trading Academy. We teach cryptocurrency trading and investing. To support this channel, kindly click the red subscribe button to become a subscriber and the bell icon to receive a notification immediately when we post a new video. And do not forget to share, like, and comment on this video. Crypto fundamental analysis involves taking a deep dive into the available information about a financial asset. For instance, you might look at its use cases, the number of people using it, or the team behind the project, or what their immediate short-term plans, news, or releases are. Your goal is to reach a conclusion on whether the asset is overvalued or undervalued. At that stage, you can use your insights to inform your trading positions. A key component of fundamental analysis. Fundamental analysis examines the internal and external, qualitative and quantitative factors of a business. Analysis study factors that can affect an asset's value, from industry conditions and the economy to microeconomic factors like a management team's effectiveness. Instead of trying to discern an asset's future price movements, fundamental analysis tries to uncover an asset's correct or intrinsic value. Fundamental analysis posits that the market can price a security incorrectly in the short run, but that eventually the market will correct itself to reflect the true value of the security. Once you arrive at a security's intrinsic value, you can use it as a benchmark for determining whether a security is overvalued, undervalued, or fairly priced. Understanding an asset's intrinsic value is essential to knowing whether to buy, sell, or hold it. For example, you may profit from buying an asset when it was wrongly undervalued by the market, and then selling it once it reaches fair value. Fundamental analysis for cryptocurrencies. The reason you can apply fundamental analysis to almost any asset is because of its focus on underlying value, which plays such a critical role in investment decisions. Fundamental analysis encompasses a wide range of disciplines, techniques, and concepts, but not all of them are appropriate for every asset. It's a matter of picking which tools to use for which asset class and why. For example, if you're an equity analyst, you might choose to examine an earnings report, a company's balance sheet, share price, earnings per share, and price-to-earnings ratio, along with a host of other metrics and variables. But if you're a foreign exchange forex trader, you'll look at an entirely different factor, like central bank data that helps to determine the state of a particular nation's economy. But cryptocurrencies are not issued by a corporation, so how can you use fundamental analysis to arrive at the underlying value of a crypto asset? As with any asset, you would look at the surrounding factors that could influence it. For example, you could evaluate the state of the cryptocurrency sector, the market as a whole, the domestic and global economic environment, supply and demand, and the competitive landscape, the move of Bitcoin, to name a handful of potential indicators. Here are some fundamentals that could apply to cryptocurrencies. White paper. A white paper in cryptocurrency is the equivalent of a company's prospectus. A company that's issuing a new security will publish a preliminary, then a final prospectus, per the Securities and Exchange Commission (SEC). The prospectus contains the information you would need to decide whether to invest in the security. Similarly, a white paper in the crypto sector provides the details you'd need to understand the projected use case of the asset, its specifications, and the originator's goals. However, because crypto white papers are not yet produced in conjunction with a regulatory organization, it's a good idea to validate any far-reaching statements they may contain. Team, project creators. Does this cryptocurrency have a specific team behind it? If so, what are the members' track records? How long have they been involved in the cryptocurrency sector? What other projects have they launched? What are team members' backgrounds and skill sets? If there's no team or website behind the asset, Then you could look at the developer community or public GitHub, if the project has one. Target market. Who is the crypto asset targeting? If we know, then what is the size of the target market? What need or use case is the asset addressing? Is it trying to replace a legacy infrastructure or fill a certain gap? Developers. It's worthwhile to research the number of contributors and the amount of activity surrounding an asset. Because some cryptocurrencies are still in development, the number of developers working on a project can often be a sign of its potential. It's also an indicator of the executive team's commitment to realizing their ambitions. Bitcoin, not surprisingly, has the most developers working on its code in GitHub, followed by Ethereum. A project with fewer developers should ring a note of caution for new investors. A note about rumors. Ad hoc discussions, or things that you hear, are not necessarily material to avoid when doing your research. It can be very helpful to know what respected colleagues think about either a team or a project, especially if there are any potential red flags. What is the general sentiment about this new project? Does this project seem realistic to others? How does it fit with everything else that's happening in the sector? If you don't normally hear this info, then look online. The grapevine, such as it is, can be found in messaging apps or on Reddit, Twitter, and Bitcoin Talk message boards. Be cautious about taking rumors into account when conducting your analysis. However, at just 11 years old, the sector is still very young. For perspective, consider that the first stock was officially traded on the New York Stock Exchange in 1817. That's 117 years before there was any regulation of US markets. Moreover, there seems to be growing consensus that cryptocurrency technology, networks, and cryptocurrency assets themselves do indeed have intrinsic value. How to properly define and quantify that value is a work in progress that can be enhanced by implementing some of the relevant principles and techniques of fundamental analysis. Now, you do not have to bother much once you are inside the Waploaded Trading Academy, as our experts help you do all of these analysis, while the tutors support and teach you how to trade them and ultimately get profits. Start now. Visit academy.waploaded.com to start trading in the crypto market as we work helping towards you get your first $1,000 in crypto trading.